Hello, everyone. This is a quick introduction to one of our indicators called GridSight. And simply put, GridSight shows you the probability of where highs and lows will form during a trading session. And it does this by breaking down price action into a two-dimensional grid of time on the x-axis, as denoted by these columns, and price on the y-axis, as denoted by these price levels. And this creates a grid with multiple smaller boxes inside of them. Then we can use 15 plus years of historical data to calculate the probability that each of these boxes contains the high of the session or the low of the session. And we also dynamically update these values throughout the trading session based on conditional probabilities. So I know that sounds complex, but let's check out an example of this indicator in our demo page, and hopefully it will make a lot more sense. And by the way, on this demo page of ours, you can freely access all historical predictions for our indicators, so you can try and backtest our indicators before signing up or purchasing a subscription, so give it a try. So our chart is ready, and I want to share a simple example with you all that showcases how powerful GridSight can be. This setup happened a few weeks ago, and we'll use our built-in replay tool to see how this plays out. So you can load up the GridSight indicator as you would any indicator in TradingView. I already have mine open here. And before we dive into this example, there are a few concepts you need to understand first. First, you can see the indicator input here called timeframe, and the value is H4. And what this means is the trading session will be 4 hours in length. As you can see in this example, we start at 10 a.m. and we end at 2 p.m., which is 4 hours. We also support H1 and daily time windows for scalping and swing trading. And you can also stack these grids across different time frames and get a higher time frame confluence, which I will share in another video. You also need to understand that we provide different probabilities based on bullish or bearish scenarios. So if you think that price will close higher at the end of the trading session versus the beginning, so for example, if you think price will be higher at 2 p.m. compared to 10 a.m., then you should use the bullish scenario. If you're on the other side and you think that price will close lower at 2 p.m. than the opening price of 10 a.m., then you should use the bear scenario. So each scenario yields different probabilities, and while you could use this indicator without a bias, it is much more effective if you already have a narrative in mind. Next, let's understand what the probabilities in this grid really mean. So all the red boxes below the opening price indicate the probabilities that these boxes will create the low of the session. So for example, this top left red box has a 31% chance of creating the low of the day. Whereas let's say this middle right box has a 2% chance of being the low of the day. On the other hand, all of these green boxes indicate the probability that the high of the session will be created inside of them. So we can see in this middle right box, we have a 20% probability that the high of the session will be created in this area. And on the top left green box, we see there is a 1% chance that the high of the session will be created in this box. Finally, you need to understand the concept of snapshots. So the probabilities throughout this trading session update exactly 4 times. And this also applies to the H1 and daily time windows. In GridSight, we have exactly 4 predictions, where the first prediction is made at the start of the session, which in this example is at 10 a.m., and then we have predictions at every quarter. So in this example, we'll have a prediction at 11 a.m., another one at noon, and the final one at 1 p.m. And at each of these updates, we are recalculating the probabilities in this grid using historical data and conditional probabilities based on how price has moved within this session. So now that we've got the basics out of the way, let's see how this plays out. In this example, we are looking at a bullish scenario because we expect the next H4 candle to close upwards. You might ask why? Well, based on a quick analysis, we know at this time the higher time frame was trending bullish. We also see that a low was just swept here. We see there is an imbalance that will likely be filled in throughout this session. And we also see equal highs here that could potentially be targets. Now, using GridSight, we can see at the first snapshot that the current low of the session in this top left red box has a 31% chance of being the low of the entire session. That's interesting, but it's not convincing enough yet. So let's step through the candles and see how our probabilities evolve. At our second snapshot here, we get updated probabilities. We see price has been bullish throughout the first column, which is a good sign given our bullish bias. And also the probability of the top left box being the low of the session has risen from 31% to 61%. And on the upside, we can see we've traded into this second row of green boxes. And if we want to target the 3 green boxes in the top, we can add their individual probabilities, and we see there is a 46% chance that the high of the session will be created in here. So given these probabilities, we have a 61% chance that price will not trade below our current low, and we have a 46% chance that price will trade into these top 3 boxes. At this point, with my bullish bias, I'm feeling much more comfortable entering a long position given these probabilities. So I can look for a buy potentially off of this fair value gap, for example. And what we can do is place the SL at our current session low. It has a 61% chance of holding. And place our TP at these equal highs. This is also the London session high for a nice 1 to 1.6 RR trade. Now, as we keep stepping through the session, we can see our entry was triggered. And as we keep rolling through to the third snapshot, we can see that the probability of our stop loss holding has now increased to an even higher 85% from 61%. And we see that the current high of the session is here in this middle top left box at 38%. We just kind of wicked into it. But we can see we have a 26 plus 31 equals 52% chance of creating an even higher high in these top right boxes. So if you were hesitant before, you can use these high probabilities to take another trade later in the session. For example, you could take a trade right when the third snapshot was released, keep your SL at the low, and aim for something like a 1-to-1 RR trade. Now let's keep rolling through the session, and we can see that our target was eventually hit. And there you have it. This example shows how GridSight brings together time and price to give you concrete probabilities of where highs and lows will likely form in a given trading session, which gives you data-driven confidence in your setups. So if you're interested, please do check out our demo page and try this out for yourself and see how GridSight can improve your trading decisions.